Hello YouTube. So today I'm going to walk you through the exact process that you have to do to analyze a stock using ChatGPT. And the method that I'm going to share with you is from a value investing standpoint. And I just want to say that ChatGPT can make mistakes. It's also prone to agreeableness. So when you're using it, I'm going to share how you can avoid this confirmation bias by doing the steps that I'm going to be showing you in this video. So stick until the end of the video to get the full benefit of this technique and method in evaluating companies. So without much ado, let's get into it. On the screen, you can see a custom GPT. So this custom GPT I have made myself. I've used quite a lot of Warren Buffett's material, letters to shareholders, several books to actually make this value investment custom GPT, and I've called it the Value Investment Oracle. So what I'm going to do, I'm going to use this, and if you want access to this custom GPT, you can find the link in the video description. So if you want me to do another video explaining how I've actually made this custom GPT, and just comment Value Investment Oracle, then if there are more than 20 comments saying Value Investment Oracle, then I will make a video showing you how I made this GPT. This is the custom GPT that I use, that I've made for value investing analysis. And as I've said earlier in the video, that you must be careful with ChatGPT because it will tell you what you want to hear. So if you are going to be analyzing stocks, you need to have a base of information on which it draws upon to actually do that analysis. And you have to prompt it in such a way that it tells you the facts and not what you want to hear, because that can lead to confirmation bias, which will lead to losses in the stock market. This is what I use, and I just want to share with you some prompts that I have here that I use to actually do my analysis. So I would say the first three prompts are my go-to prompts. The prompt number one, which is company analysis. It says model EPS growth for, you put the ticker of the stock that you want to model, you put the start of the year to the end of the year based on historical reports, forecast the stock price for the ticker assuming constant PE ratio using EPS projection. What is the company's backlog or secured contracts as of the latest fiscal year? So I'm going to do an example analysis based off of this prompt and how I actually use it. So I've copied that prompt, come and paste it in here in the chat. Now what I'm going to do, I want to analyze a company that I've recently bought. It's called Valaris. So the ticker is VAL. So I want it to analyze from 2020, and then I want the analysis to actually go into 2030, and then I want it to focus the stock price for the same company. I know what the company does, so I will take out the last part of the prompt, which says summarize the business model and core operations of the company. I'll take that out. What I just want to know is, am I going to make money on this stock if I buy? So that's the prompt. Model EPS growth from 2020 to 2030 based on historical reports. Focus the stock price for VAL assuming constant PE ratio using EPS projection. So why I actually use constant PE ratio, it gives a guide. It's not foolproof. It just gives you a guide of what the price would be given a constant PE ratio, and it's not something wild to assume that a company will maintain a consistent PE ratio unless something very, very big happens in the company to change investors' perceptions and expectations. So once you're ready, just click enter, and then we wait for it to. Now we actually have the process information here. So it's saying that EPS growth for Velaris from 2020 to 2030. What it's showing us is that the documents do not provide a complete model of EPS growth from 2020 to 2030. However, the 2023 10K indicates EPS was significantly higher in 2023 compared to 2022, and the company is guided for continued earnings improvement driven by strong offshore activity and margin expansion. So what I personally do to make this more accurate, I will go and download annual reports. So I'm here on their website of Velaris annual reports, and what I want to do is download maybe 5 years worth of annual reports. So once you type Velaris annual report, it brings you to this page here. So these are your annual reports from 2024 going down to 2026, and most companies will have archives as well, so it performs against that checklist. So I'll say evaluate val against the given checklist, and then I'll say enter. So it will then give the answers based on the information that we've given it. So PE ratio is around 14 to 15, so it's below 20. That's good. That's what I want. PEG ratio is above 1, and this is 1.25, so that's not too bad. It's above 1, but it's not too high. DCF valuation provided. Usually I do another prompt to get the DCF valuation, so we can do that afterwards. So profitability and returns, the return on equity has failed for the last 3 years. So this company Velaris is more of a turnaround. It's a company that has gone out of favor. It's been making losses, or it's not been very good, but it's now turning around. So that's what Velaris is, and they're into oil drilling. So revenue and earnings rising sharply. Dividends, no dividends are being paid. And then your financial health, they're reducing their debt. They're market leaders. It's got a long history. They've got share buybacks. So the result, it doesn't look too good, because this is obviously a turnaround, but it's one of Monish Pabrai's picks, which is a Dando quality investment. Heads I win, tails I don't lose much. So let's do a DCF. Calculate the DCF value for VAL. So it's got everything that it needs to actually calculate this discounted cash flow based on the materials that I've used to make this particular value investment Oracle custom GPT. So the DCF value is approximately 89. This assumes 12% annual cash flow growth for 7 years, and a 10% discount rate, and a 2% terminal growth rate. So if the stock price is around 70, the stock appears to be 20% undervalued, which is okay, which is fine by me. So this is just to give you a short demonstration of how you can use ChatGPT to your advantage, and don't be left behind, because AI is developing and AI is taking over, and people who know how to use AI properly will be able to get ahead even in their investing. And I don't think AI is going to kill deep value investing. I think it's actually going to make it better, because the market still reacts in the same way that it has always done, because people are behind the prices that you see on the stock market. That's it for today. May the markets be with you. Goodbye.